Are you still investing in the S&P 500? In today's video, big tech is back. It seems like the profit in the engines that they have are just continuing to hum. We are seeing a lot of growth ever since we've seen kind of the bottom of the market right about April 8th. So let's break this down a little. So the exact same tech giants that we've seen really drag the market down in the beginning of the year seems to be making a really big rebound, starting to get the recovery, starting to see some legs as we go into June 1st. It's kind of crazy, especially when we think of Nvidia. So a lot of people were saying that Nvidia was really not doing as well. We know the tariffs were in place. We know they were having a lot of issues with exporting chips overseas, which we know is still the case. But Nvidia put a bow on better than expected earnings again for big tech delivering last week, which is huge when you think of the rebound of the S&P 500. And we're also going to look at the Magnificent Seven. So even though they can't export chips to China right now, they are still doing exceptionally well. Nvidia, Microsoft doing incredibly well. Big rally. They are hitting record highs. Traders are better. Traders are betting we are going to see this poised for a much larger lift in 2025. Now, when we start thinking about the earnings season, the S&P 500 was within 4% of the February record, which is a huge rebound and eased the tensions, of course, with tariffs. We're seeming to have some talks, have some things that are going on right now that could make it a little bit easier. But big tech is really showing a huge command for cloud computing services. Now, we know there are a lot of larger companies that are building data centers, that are building nuclear reactors for the power it is going to be required to do this. When we start looking up software that companies need, electronic devices, digital advertisement is a huge impact. And some of this isn't impacted by tariffs just because of where it is and kind of how it's structured. It's a lot harder for a couple companies that have physical goods. When you start thinking of Amazon, that ships and receives physical goods, that is very hard to avoid or really appease the tariffs. But when we start thinking of companies like Tesla, since Elon has taken a step back from Doge, got back into Tesla, Tesla is up 56% since April 8th, which again is kind of that date is kind of pivotal to where they said the market kind of bottomed out. Nvidia, Microsoft have gained 40% and 30% respectively. So if you went in April 8th and you bought into Nvidia, you would be up 40% right now. And of course, if you bought Microsoft or Tesla, you'd be up 30 or 56% as we're seeing it right now. Now, as a result, Bloomberg is saying that the Magnificent Seven stocks, which is comprised of Nvidia, Microsoft, Tesla, Apple, Alphabet, Amazon, and Meta, is outperforming the S&P 500 over the past 8 weeks, which is a pivotal shift that we've seen within the growth. Now, me personally, with investing in the QQQ and that S&P 500 with the VOO, makes a really big difference because when we start thinking of size, this is not the value weighted, this is the market weighted. So the larger these companies are, the bigger weight they're going to have within those big S&P 500 funds. And when we start thinking of the Magnificent Seven, they are about the third of the index, so roughly about 33% of the index, which is kind of crazy. And they are responsible for 19% of the rally from that April 8th bottom that we've seen. So thinking of those literal 7 companies that have been driving it, and not just the big tech, there's also a few other names in there when we look outside of the Magnificent Seven, like Netflix and JP Morgan, which are contributing to really the big S&P 500 gains. Now, for me personally, the S&P 500 is always something that I invest in. And when you start thinking about 10 years, 20 years, 30 years, 50 years, putting $500 in the S&P 500, you can wind up a multi-millionaire within 40 years. And even breaking down, if you're putting $500 into the S&P 500, roughly at a 10% growth, you're looking at $3 million over 40 years. Even thinking of a shorter term, like let's say 25 years, $500 a month is going to yield you about $668,000 in that S&P 500 fund by just putting $500 in there, which is kind of crazy. Now, we also seen a very rare occurrence that doesn't seem to happen very much, and that is that the S&P 500 is trailing a little bit when we look at Apple, when we look at Amazon, because both of those companies are very, very impacted by the tariffs like we were talking about, and this could lag the market. Now, we might not be out of the forest yet. I'm getting into clear blue skies because there is also a big recovery risk based on tariffs, based on Trump's policy, which is really overmarking and really the overhang of the market itself. when you start looking at the growth. If there was, and if the tariffs were settled, when the Federal Reserve and everyone is expecting for June to see a rate reduction, the market is going to be on fire. If you're an individual that's seen the market, going down in March and April and then pulled all of your money out, chances are you missed the 9-day run up that we seen a couple weeks ago. It has been doing incredibly well. Now, the benchmark sank 1% on Friday. Again, Trump accused China of violating an agreement to ease the tariffs. Anything that is in the news. And when you start thinking about the economy itself, take a step back. Look at where, the inflation is at. Where's the jobs report? Where are all of the triggers of the economy? When you factor out the news, the effect, the social media, the things we see in the stock market, it seems to be when you focus that or factor that out, the economy itself is doing incredibly well, even with the tariffs, even with the changes, things like that. The economy is still strong, is still doing incredibly well. And when we start thinking about the S&P 500, it is trading 21 times over earnings, which they expect it to be over the next 12 months, up from 18 times the earnings. So we know these companies that are really high, really valuable are continued to grow as we've seen it. Big reliance on tech and a big amount of companies that have a very strong reliance on tech. Now, when we start thinking about some of the other aspects, some of the other industrials, some of the materials, the energy, the finance, they expect a lot of the spending recovery to really kind of increase in the second part of 2025, meaning we could see the S&P 500 go to an outperform, and they're expecting roughly 15 to 70%, 17% growth within 2025. Now, when we start looking at the broader index, spending on artificial intelligence continues to increase. Meta raised its forecast for capital expenditures, meaning they're going to be an increase in spending. If we can couple this with the Federal Reserve lowering rates to make money easier to get for these companies to spend more money, it's going to be kind of crazy. Now, they could be flat. We could see a little bit of a downside, but the market going up and down. When we talk about investing, we are looking at a 5-year plus time frame. So if you're putting money in there, if you're doing day trading, you can. But if you're taking it, making consistent contributions into the S&P 500 and holding them and making contributions for an extraordinary amount of time, it is going to grow. And they are estimating, again, this year being roughly 15% is what they're thinking for the S&P 500 going into 2025. Now, of course, when we started, I mean, looking at the March, looking at the April, a lot of people were really concerned with a lot of it. Investors drew back a lot of money, moved more into bonds. We are starting to see a little bit of easing with the housing market, and a lot of things are going to be triggering a lot later in this year. Again, if those rates start coming down, it's going to be really interesting to see exactly how it looks and exactly how the forecast for 2025 looks. But as we're looking at it right now, looking at the investment within the S&P 500, absolutely something that I'm continuing to put money in. So let me know in the comments what you guys think if you're investing in the S&P 500. And as always, thank you guys for watching.